Good morning, rhinos. What a great day. Let's do this. Sorry, I'm still getting everything together because, as you guys know, my day starts way earlier. And to do this even at 10 requires me to really rush. But we're here and welcome. Love having everyone. Come on. So I'd be remiss to say, which I'm going to start by doing. So bear with me while I get a link real quick. All right. Think I got it. Cool. X there. All right. Happy day, Donnie. So today at 12 o'clock, we're having a RHINO State of the Union address. And it's funny because some people are like, Anthony, what's the State of the Union? And I find myself constantly coming up to a challenge in the sense that messaging is key. And I never say this to be rude or derogatory. But if you cannot explain what you're doing to a 5-year-old, you're doing it incorrectly. So State of the Union address, someone such as myself who's really into politics would say, oh, State of the Union, it comes once a year. You talk about everywhere you've been, where you are and where you're going. Everyone participates and everyone cheers and the State of the Union is strong. So I like doing that. I like our company presenting in that format. For those that are not really into politics, they go State of the Union. I don't even know what that is. So I will constantly get better with messaging. But with that said, I'm going to put it into the chat at 12 o'clock today, and everyone would have received the email. That is the registration link. Abigail will be presenting. For those that don't know Abigail, she is our right hand. Any and everything that gets done on RHINO goes through her. The reason we have such a great working relationship is because I'm allowed to go ahead and be creative and think and come up with these really grandiose ideas. And she is the filter. Anthony, we can do this. Anthony, we can't do that. Anthony, let's find out how we can do this, right? And she speaks Anthony language. In fact, I was speaking to her yesterday, and we were talking about just kind of going over where we've been and where we're going, kind of like getting ready for the State of the Union. And I go, Abigail, amongst all of the things that's on your resume, the thing that is most important on your resume is that you speak Anthony. And she starts laughing. I go, and I speak Abigail. We work well together. That's the most important thing. I trust you. I know you are. If it can be done, you will get it done. And I know that you allow me to dream, and what can be done will get done. So a lot of people hear me talk and they're like, okay, Anthony, that sounds exciting. But what Abigail provides is when she says it, it's like, okay, now it's functional. Now it's like actually getting done. Because Anthony will have 1,000 ideas, but these are the ones that are actually doable and happening. So I just start by saying that, and I'm going to click it one more time in the chat. That is at 12 o'clock today. We expect it to be the largest attendance we've ever had. And not that we post the number of attendees. Well, actually, you would know the amount of people that are registered to attend, but that doesn't mean it's the number of people that attend. And I'm referring to the RHINO coin balance sheet because we post it every day. But it is well in the triple digits, and we believe that to be the case today. So it's going to be exciting. It's going to be fun. Make sure you're there. Cool. So let's get to the markets. Now, as it pertains to the markets, I woke up and I was actually in a bit of a bad mood. Not because of life. Life is great. But so let's take a look at what we said yesterday. If we believed the market was going to start higher, yes, and we knew that, right? Like the futures were up 400. That wasn't us being Nostradamus. Okay. We believe the best thing that could happen was that the market went up, then it came back in, and then it ended on its highs. Now, what we really wanted was up 400, now down to being up 60 to 100, and then end on the highs. I believe it was up 400, came down to being up 250, 300, and ended on the highs. So we were close, right? That's what we were looking for in terms of the best case scenario. We wanted to see the QQQ volume higher than the day before. I don't think that was the case. We'll take a look. But the Twitter volume was higher than the day before, which is really good. Okay. So I believe that we'd walk into today and it would be a good day. Let's start up a little bit. Let's start getting that rip-roaring rally. And when I saw the futures this morning, they were down 40. And then the retail sales numbers came out. I didn't see them. But I believe it brought the market down a little bit, and now you have more talk about Ukraine and Russia. Because again, that talk is always behind the market reaction, right? So if the market's going down, it is in the best interest, it is in the obligation of news outlets to go ahead and find a reason why it's down, because everything has to have a reason. And here's the thing that goes back to being able to describe something to a 5-year-old. If you say the reason that the market is down because the money flow is becoming exhausted, the international money flow is filling in the buckets of the retail money flow that's coming out of the markets and large, nobody knows what that means. Therefore, that's a TV station, and even though it may be correct, no one's going to watch. Because if you don't understand something, it doesn't matter if it's true. You don't understand it. Welcome to politics, right? It's easier for a politician to say, we're going to build back better, than actually say what that means. It's easier for a politician to say change you can believe in than really what that means. It's easier for a politician to say, we're going to make America great again, than really telling you what that means. They're able to say that sentence to a 5-year-old, which is fine. That's actually a commentary on human, right? Like how low our education is, that for us to be mobilized in any fashion, we need to be spoken to like 5-year-olds. So it is part of RHINO that one of the things that we'd like to change is an education level. And obviously, if you're a part of RHINO, and obviously if you're part of it today at 12, you're going to know how we're going to do so, not how we're going to try to do so, but how we're going to do so. Because everything has a couple of ways. Like, I don't know if you've ever seen Independence Day, right? So Independence Day with Will Smith, aliens come to the planet, and the F-15s are shooting at them, and there's a big shield. Nothing's happening. Now, can we say that the F-15s maybe possibly dented a shield, kind of, sort of, probably? Yeah. The same as if you dump a cup of water into the ocean, the water level rises. It's very nothing. So how did they take down these aliens? Spoiler alert, they went ahead and went to the ship where the genesis of those aliens ships are and where they're being programmed and controlled, put in a virus, and were able to disarm all of the alien ships. Therefore, they were able to be taken down. The point is, in any type of challenge, no matter how hard it seems, there is a solution that is at the genesis of that problem by definition. If you were to say, okay, all people with red hair are violent, right? Like, well, there's two ways of doing it. You could go ahead and see everyone with red hair and arrest them or watch them very carefully. But could you ever scale that? No, because you're not changing it. You're dealing with the symptom, not the problem. Well, what if you were able to go ahead and vaccinate every woman that they can no longer have a child with red hair, right? Sounds crazy, but you would solve the problem. The point is, same thing with education. How do you get to the genesis of where that education starts to go ahead and create a very big solution over a relatively short period of time that has such a high magnitude, right? Welcome to RHINO. That's going to be at 12 o'clock. Now, the point of me saying this is I actually completely forgot. I went off on a tangent. But talking about the markets and talking about the education. All right. So anyway, so the retail sales number, it doesn't matter if they were up or down. The market went down and they started talking about Ukraine and Russia. Okay. So what does that tell us, right? Like, what do we get out of it? That the market started down today. Okay. Well, did it start down big? I don't know. I can't see the market. I know that it was projected to start down 40. So what is it that I believe can happen? Like, let's go ahead and continue the research. What we said yesterday happened. Okay. So that means we're in a pretty good position to understand what's going to happen today. But what we said was, if yesterday happened, we believe we come into a day that was up. That's not the case. Therefore, we're wrong. But we're able to identify exactly where we're wrong. And now let's come up with an alternate, a more improved thesis of what happened. So a couple things could have happened, right? So the market went up a lot yesterday, and that was the suckers. They bought into it. Silly people. They are so silly. They didn't know the market was having a little bounce and it's going to go right back down. That's possible. All right, everyone bought the market yesterday. The downturn is done. Now they're just a little bit exhausted and they're like, okay, I bought. I'm not going to buy. I'm not going to throw all my money in the market. I threw a little bit. Now let's see what happens. Because if the market doesn't tank from here, I feel confident to put more money. And if they put more money, well, more money on top of of a market that found a base equals a market that goes up, right? Okay. I think those are the only two scenarios, right? Like either the people that bought yesterday are going to be wrong, or the people that bought yesterday are going to be right. Right? I think it's one or the other. So now we take that prism and take a look at today. Now, what's important about today is at 2 o'clock, you have the Federal Reserve minutes. Now, what the minutes are, it's like any kind of corporate meeting. There's a typographer or whatever they're called in the meeting that takes down the minutes. All right, at the last Federal Reserve meeting, before they made their rate announcement, which was that they weren't doing anything, they were having internal discussion about what? Because if that internal discussion is like, all right, guys, listen, inflation's crazy. We got to do something. You know what? Let's give it this one more chance. And if it doesn't come down, we're coming out with a bazooka. In which case, if that's what they said, well, that's the minutes from January. We know what's happened since January. We know those numbers have been big. Therefore, 1 + 1 equals, oh my God, the bazooka's coming. So you're able to go ahead and see what they said and what kind of like what we do. If this happens, we'll do this. If this happens, we'll do this. Having the benefit of already seeing if those things happened. Now, of course, I'm not so silly to believe that nobody knows what these minutes say. I suspect somebody knows what they say because they're the most important thing right now. They're going to be the largest market mover today. At 2 o'clock today, the market's going to go up a lot or down a lot. And then I don't know, but it'll be volatile at 2 o'clock. So let's play it out. Okay, so we have our initial thesis of what could happen today. The market goes up or the market goes down, depending on where it starts today. Okay, does the market give back everything it had yesterday? Or does it settle, stay flat, and build from it? Okay, what we think might be the best case scenario is if it stays below the flat, right? Not much, which shows you that the market digested the move yesterday and accepted it. But because it's a 2 o'clock pending announcement that theoretically, the biggest thing in the market right now is rates, it's going to be the biggest mover. So realistically, the settlement of the market staying flat, may not be the digesting of yesterday. It may be, let's sit and wait to see what happens, which means 2 o'clock is quite important. So let's bring it to 2 o'clock. If 2 o'clock comes around and it's something that sounds hawkish, and hawkish meaning like they're going to attack rates, they're going to hawk on them. And I don't even know if that makes sense. I don't even know if that's why it's called that. It just felt natural to do. But hawkish means that they believe rates are going up, and dovish means they want rates to go down, right? So if it's a hawkish sentiment and the market either A, does not go down, or B, goes up, then when you add yesterday's market reaction with today's digestion, and the market moving up on the worst news that it could have at the moment, then I'm willing to say we're at a bottom. That's enough for me. We've been watching enough as time's gone on, so it's not like that's in a vacuum. We've been together for quite some time. That on top of everything that is happening, again, outside of what we don't know, because we don't know what we don't know, we believe a market's at a bottom. If that happens, in which case, just go buy everything, right? If that happens and the thing comes out hawkish, right, and the market goes down on it, well, then the market's still acting surprised, right? The market didn't fully price in the magnitude of what they could do. And then the market asks itself, well, where is the pricing? Well, where's the base for this? If we're still not at it, I'm out of here. Let me wait till we find the base. And that's how markets go up and down. Markets do not go up and down based on more buyers. It goes up and down based on sellers, right? Is there a lack of sellers or are there more sellers? Because people always want to buy, it's just not if people want to sell. Because the market goes up 90% of the time. So there's always a confluence of buyers. It's just a matter of where those sellers come in. So 2 o'clock, we're going to learn a lot. Isn't today's FOMC meeting simply releasing the meeting held 3 weeks ago? Don't we already know the basis of that view? Yes, that's correct. But we don't know what those minutes say. That's the point. Because we already believe we know what it says, well, upon them releasing those minutes, if the market reaction is very poor, that the market goes down, that means that the market fully didn't price in the magnitude of what's coming. That's bad. If those minutes come out and it, again, vindicates exactly what they've been saying, blah, 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 hawkish rates up, blah, 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 and the market takes it and goes up, that means the market priced in those rates. Therefore, money managers can say, hey, listen, the market already priced in the rates. Now let's go take a look at stocks. What's undervalued? Because we know where to base when it comes to rates, because we're talking about rates going up and the market went up with it. Market knows rates are going up. Cool, let's go. So 2 o'clock is actually kind of like very important. Okay. Now, we already have money in the market. Truth or tell, right? So we have our money in Twitter. Now, the part that bothers me about Twitter, and again, we made that 40% in 18 minutes, and then the market went up, and then the market came down, and we got back into it. So Twitter we got into for all the reasons we got into it, right? So for those that are new, you don't know what that means. But was the new CEO, most notably the stock buyback, the valuations, the tech index coming down enough that we believe it's going to go back up, all of these things, the market, all the rest of it. Now, what's so great about the algorithm that we use, the RHINO sequential, is that it already factors in every thought that I already have, right? It already factors in, and it factors it in based on price action. Well, if the stock is doing this, 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 and this, well, X, Y, and Z is already priced in. That algorithm is smarter than me, because the algorithm already knows everything that's known, because everything that's known, that it's already in the stock. The stock always knows all known information. Therefore, if you can calculate a stock's movement with something as targeted and as amazing, as successful as the RHINO sequential, well, then there's nothing you don't know. The stock does what it does. The thing with Twitter, like we spoke about, is there's a certain feeling of omnipotence, where you've been right so many times that you're like, okay, I'm able to take the training wheels off. And what's unfortunate about that line of thinking is the algorithm is not training wheels. It should be the bike. Why did I look at it as training wheels? Because I said, all right, you know what? I can prove myself over this, which is completely silly because I created that, right? So like I built it. That being said, we're in Twitter. Now, we're not all 100% in Twitter. We have a bunch of cash sitting around in case something bad happens. The part that bothers me is that when I'm in a stock based on the algorithm, I sleep very comfortably. I'm in it, it goes up, I get out, everything's fine. If it goes down lower, I'm like, okay, now it's a 20 red and green. I'm quite comfortable. Twitter right now is not even a red. I'm not even sure that it's a green. I'm not even sure that it's a 1, right? Like I'm buying it based on my belief and my intuition. So I know yesterday Twitter closed at 36.98. It was a good day. The account was up really nicely. And my 38s were up, right? The 38 call options, the 40s were still down. Okay. And the belief was the market would open up today higher. And NVIDIA reports at the end of the day, and I believe they're the 6th largest tech company. So our belief is NVIDIA does really, really well. Like they do really, really well. And tech opens up big tomorrow. And we're kind of on the line that tomorrow, regardless of where Twitter is, we were going to sell it because we believe that we were going to have a good week and that NVIDIA was going to give it an extra oomph. So we were either going to sell Twitter stock and or sell the calls on it. Then this morning, I see Twitter go across the ticker 35.5. And I'm like, you got to be being kidding me. I was like, and immediately I got so mad at myself because I'm like, why am I messing with a stock that is simply just in my brain, right? Like everything I shared about Twitter is real. I really believe it's going to go up. But just because I believe, let's go back to day one. You do not tell the market what to do. I'm simply sitting here telling the market that Twitter needs to go on. And the market's saying, Ant, I don't really know why you think that. Oh, I get why you think that, but we don't think that. Therefore, Twitter's going to stay where it is. This is kind of what it looks like when we get to the Anthony wants to throw his computer out an effing window indicator. Anthony looks like this. So I don't know where Twitter is, and we're going to take a look at it. There's a chance it's 35.5 right. There's a chance it's under 35. I have no idea. I have no clue. But I know if it's under 36, I'm going to be so mad. Because it's 36.98 yesterday. I really was hoping that it would start up like 37.5 today. I'd be able to be like, okay, you know what? I'm not waiting for 40%. Let me get out. Oh, or maybe we'll wait till tomorrow. We'll get out. I don't know. So we'll take a look. Also, before we take a look, I think PayPal is now 11 red and green. Facebook's at 10 red and green. So the market's giving us these double-digit red and greens again. I have not looked for any new ones because I knew they didn't exist, but now they're starting to come up. So tomorrow, Brooks, I was going to take a look at it. I didn't need you to spoil it for me. Now I want to throw my computer out a window. But I love Brooks, so that's okay. But spoiler alert, come on. So tomorrow I'm going to go ahead and do the homework to make sure that I have that list ready for us, because we might just go ahead and say, you know what? Like we've always said, it's not how you manage your winners, it's how you manage your losers. And if we have a position that's down, that's being stubborn, we go ahead and take our pride out of it and say, all right, we've made 22 out of 26, 40% gainers. Are we going to let this one bring us down to zero? Or are we going to say, you know what? It wasn't a good idea. Let's make it back on the next one. I don't know. So let's see. Unfortunately, I already know where the stock is because Brooks. Okay, so I'm going to put the webinar link one more time to the 12 o'clock for those new that have just joined us. Now let's go to shared screen and see what's going on. All right, let's get this out of here. You know, so when I'm home in the morning, I actually been taking my computer home with me, and I wake up at 6 and I start working. But because I don't have the extra screens at home, you would think I have like a million screens here. I could afford to bring one home, and I do. I have them home. I think my wife would kick my butt if I turned the kitchen table into an office. So I haven't brought it to the table because then I'd have to like constantly bring it back. I don't know. I guess you have to live with us, right? Okay. So let's see where the market is. Woof. Well, that is ugly. Retail sales surged 3.8% in January, much more than expected amid inflation rise. Okay, so the retail sales surging would say what? All right, they're definitely going to raise rates. The economy is really strong. And I think that's probably, well, let's just press this a couple more times because, you know, sometimes it just doesn't work. Okay, so what's the Dow say? Dow falls on a full, okay. The Dow's down 0.65%. It's down the least of everything because it's the safest index. It's all of the largest companies. It's where international money flow comes in. Now, if you know anything about international money flow, when a sovereign fund from another country sends money to the US, they're not trading. They don't go buy 1 million shares of Microsoft and say, okay, sell it for me tomorrow. They stay in it, which is why there's so much less volatility with the Dow, which is why when the market's going down, you see the Dow outperforming. And why when the market's going up, you see it underperforming because that's not an index people are trading. But when you see it at 0.65% and you see it not getting cuckoo for Cocoa Puffs, you can feel comfortable that it's just the market being the market for the day, right? The S&P 0.74%, right? It's like, even still, it's not a crazy number. The NASDAQ's down 1.31%. That's a big number. That's your retail people. What's going on? Everything's going down. We're going to sell, sell, sell. The Russell's up 2.7. That's a big up day. That's from yesterday because it says 215. It was a big up day yesterday. And I'm looking at the VIX and it's up 3%. Doesn't seem that much. Let's see if let's see what Bitcoin is. Down 500. Oh no, Bitcoin's down 500. It was just up 3,000 yesterday. So we don't think that's a big deal. Google plans privacy change similar to Apple, which wiped out 200. Okay, so that's why Twitter's down. All right, well, Google's planning on doing this thing. Okay, well, does that mean my stock should go down today because they're planning on doing something down the road? I don't think so. And let's talk about this. All right, so what Apple changed was in the iOS. Can somebody tell me how many people own Android phones? Because last I checked, Android was the discount phone. And that's not to be derogatory to you if you own an Android phone. But Apple is a premium phone. Apple is a very expensive phone. The Android phone is not expensive. I'm sure they have versions that might be, right? But I'm pretty sure if I go look it up, I'll see Apple's worth more than Google in terms of phone. Meaning a couple of things. One, there's a much larger market share of Apple phones than Google phones. Secondly, if Google is the cheaper phone, it stands to reason that the owner of the phone has a lower discretionary income than that of the Apple phone. Okay. So do I believe that any social media company that has ad spend should go down nearly as much, if anything at all, because Google's announced this? No, I don't. I think that's crazy. And they're saying they're planning on, when they're planning on, next year? 2 years? And Have you ever planned something that didn't happen? Yeah. The market reacts on headlines, but then adults come to the room and they're like, all right, well, when they do it, we'll take care of it then. Right now, I'll buy the stock. So if that's why Twitter's down, I gotta tell you, I'm probably gonna buy more Twitter. And maybe because I'm prideful, and maybe because, hold on, I see something. Google is not iPhone, Samsung Galaxy is. Okay. Samsung Galaxy is 1500 is what you're telling me, and they have the Android system? Because I'm pretty sure if we look at market share, the phone is like 80 to 90%. Right? Do we need to do that right now? Let's go. 31% is Apple, 8% is Vivo, I have no idea what that is. 9% is Oppo, no idea what that is. Orange is what I don't have no idea what that is. Oh no, that's other. Black is Apple. Samsung is 18%, right? Google also made a phone called the Google Pixel. Okay. So I'm kind of global smartphone, right? Let's see. Now I'm just interested, so I don't mean to take people's time. iPhone first. All right, let's see what this says. Okay, so January 2022. Is that true? Android is 70%. That's insane. Okay, well, apparently Android is dominant in the market, and iOS accounts for 25%. So 1600. And so they have some 15, 16, 1100, but they also have a lot of the 699s. And in fact, I believe a lot of Android phones are free phones. Is there like a Android cheap phone? Okay, you could buy a $50 Android phone. Look at this. You could buy a $0 phone for $7.50 a month, $7.50 a month. You could buy a $29 phone. Okay. The point of what I'm trying to say is I'm learning something new, right? Android is 70% of the market. Who would have thunk it? But the people that go ahead and use the Android phone, by the way, all Apple and Android phones made in the same factory, just on different assembly. But the people that use the Android phone, because Google has a big offering, a big outreach to third world communities, because they want to bring everyone into the fold, which is totally cool. And obviously there's a business behind it too. If they bring them in the fold, raise their standard of living, they have now money, they have discretionary income, they go ahead and spend on Google, right? And we're cool with that. If you're going to invest in educating someone, well then duh, you should be the one that stands to gain by when they go ahead and spend that dollar. One would think, well, hey, listen, I helped you so much. Why don't you come eat at our restaurant, right? Like, I'm cool with that. I do not think, I wonder if you can look it up. Hold on. Net worth iPhone user versus Android. I wonder if they ever did a study like this. The median iPhone app user earns $85,000 a year, which is 40% more than the Android phone. Wow, they really do these studies. How cool is that? Okay, 40% more. So if you have $85,000 a year, you have a lot of discretionary income, right? Like maybe your bills and overhead and family and rent and mortgage and car comes out to like 70,000, 65, 70,000, whatever. Well, you have 15, 20,000 to spend on stuff, right? It's conceivable that your data is worth something because somebody wants to sell you something. If the median Android user is 40% less, then that customer is 40% less valuable. But is that true? Because if they don't have an income that allows them to have a discretionary income, well, then they're 100% less valuable because they have just enough to make ends meet. And I don't know that to be true, but I do know iPhone users are more valuable than Android users. And we just learned it together. And I'm really not immune to learning something and with everyone, right? Like, I didn't know this. So that's pretty cool. All right, so let's go back to this. Now the Dow's coming back a little bit. Nasdaq's coming back a little bit. Okay, cool. Any other headlines that we should be looking at? Walmart's earnings may signal if shoppers are spending. Nobody cares. Roblox shares dive 24%. That's important. That is everything metaverse, which means the market's saying, because you would think the market would jump in. They just signed a deal with the NFL, which really sent the stock far higher. But you would think that the market would say, whoa, okay, let's take an opportunity at Roblox. It doesn't look like they're doing that yet. All right, let's take a look at how bad every stock is doing. Okay. So Twitter got down to 35.60 today. How obnoxious are you, Twitter? Okay, so let's see what's going on here. So still green, which is something we would never buy. No green here, which is something we would never buy, but we own Twitter. And there might be a point where we just say, you know what, enough's enough. So it was up on higher volume yesterday. It's down on what looks like it's going to be lower volume than it was yesterday. The volatility is increasing for the Nasdaq, which isn't good. Let's take a look at the Nasdaq. Okay. So what do we see? Today, let's clean this up a little bit. Okay. Never moan phone, it's all about chips inside. Intel, yeah, no, absolutely. Okay. So we have a market that's going down. Okay. We have volume that's going down. And again, I know this is a day, and I know that this is only an hour, but it does look conceivable that this is at a slower rate, if not a regular rate. And we see volatility ticking up. Okay, that's usually not good because you have price going down, you have less people participating, but the price is still going down and the volatility is going up. What's coming out there? Well, you have a Fed coming up at 2 o'clock, so I suspect a lot of action is going to happen then. Look at that. PayPal is now 11 red and green. So we're going to put that up here. Facebook is now 10 red and green. So we're going to put that up here. Now, NVIDIA reports earnings at the end of the day. We believe those numbers are going to be very good. Caterpillar's up. Lucid almost, look at that. It got to the top bands. It's bouncing back down. I got to tell you, it's not much going on. I think maybe I'll buy a little more Twitter just because, like, I want to. Let's see how bad I got whacked today. Oh, under 20,000. See, that's what you call like a really ugly morning. Like, that is not a good feeling. But let's see what we can do. Yikes. Because we do think everything's going to be up tomorrow. So let's just see if we could get out of this tomorrow with a bit of a profit. The limit. See, bop. Give me the stock. Okay, we got that. Just remember, we have 30 days. There's a good, I don't need to freak out, is the point. We have 3,200 left, and there's a reason why this money's still sitting around. So I could do stuff like this. Okay. All right, we'll leave it alone. So let's see, our new cost is 80 at 131, and then 150 at 1.03. Let's go ahead and change the orders. Okay. Okay, place order. Let's go change the other one. So we were able to bring our costs down. And again, we have 30 days. We're not freaking out. This is what a market feels like. That is an ugly day. Okay, leave it alone. There's money here for that reason. Now, are we celebrating? Are we saying, oh, great, we're down money? No, if we could go back in time, we would have sold when it was at 27. We would be buyers today. But we believe the news that it's going down on is not that consequential. We do believe that the market's giving back a little bit from yesterday. And we do believe the news at 2 o'clock is going to come out. They're going to say something in the effect of, oh, it's hawkish. And we believe the market already priced that in. We see other companies buying stock. We see Twitter has billions of dollars to buy their own stock. We're not going to go ahead and say, oh my God, we're scared off. We have 30 days. Hey, Melanie's in the house. All right, so Melanie, red and green is our indicators. So just to give you a bit of a tutorial on it. So this indicator measures the coiled spring approach of it. So when the velocity, when the rate of change, when the volatility, which is a second derivative that we have in the algorithm, is moving in a fashion that indicates that the stock is becoming a bit of a coiled spring. That's what this is. But a stock that's going to zero, that could be going bankrupt, that they just found out the CEO is doing something really bad, could be exhibiting the same price action. Therefore, we need another indicator to show us that there's money flow. So as long as the money flow is coming into a stock that's becoming a coiled spring, we feel very good about it. So we don't actually start moving on these things till this number is 16. So it really shows us the stock is completely wiped out. It's only an 11 now. Facebook's only a 10, but these are now on our radar. We're going to have a whole new list of them tomorrow because we're going to look them up. Not today, probably tomorrow morning. So between 9:30 and 10, I'll have it prepared for 10. The difference with Twitter is it was a fundamental story, a story that makes sense to me. So I believe I might be stuck in it for like now or a week. I got to see what I'm going to do with it. I'm not enjoying that I'm down on it. I can tell you that much. But I've been around the block long enough to know that one bad morning does not equal and does not disqualify 2 good mornings, right? So we'll see what happens. If I had to be a betting man, I say that at 2 o'clock, the market hears something and it rallies higher. That's my opinion. And of course, my opinion is not worth much right now because my stock is down. So let's see what happens, right? Totally love everyone. We're making it an early day today. 12 o'clock is the event of a lifetime. I don't mean to overdo it, right? But let me just stop this, right? There's a lot that we're working on. This platform, RHINO Wealth, is a fun platform. I do it by myself. I trade by myself. I bring people into it. I'm able to share a little research, share an education, which is totally cool. I think everyone's better for it, right? But this isn't what we do. What we do is something far bigger. And at 12 o'clock today, that curtain's going to be opened for you. We have a new partnership program. We have new updates, a lot of really cool stuff. In fact, I'm going to be in attendance. I'm not presenting. I will be in attendance. It will be our largest attendance. So check out Samsung 100 TV prices, people who buy Android phones. So I'll tell you this when it comes to the really, really big ticket thing, right? It's pure marketing, duh, right? But like when you go to a restaurant, what do you do when you look at the menu? You look for the most expensive item. That is where you have an anchoring effect, meaning that is what you're anchored to. Anything under that price now looks relatively cheap. So there are menus out there. There are restaurants that have a $200 tomahawk on it that they never expect to sell a single one. They'll have like maybe 1 or 2 in stock because they have to. And if they don't sell it, they end up letting the cook eat it because that $200 tomahawk allows them to sell so many $50 New York strips. When in reality, another restaurant could only sell a $30 New York strip, because when they look at the menu, the filet is $34.99. Therefore, who is buying a New York strip for $50? Nobody. So that's how that works. So 100-inch TV, I don't know many people that own 100-inch TV. I would like 100-inch TV, but even that, I would never go buy a 100-inch TV. That's crazy. Unless you're like an uber bazillionaire, God bless. But when you go onto a company's website that has a 100-inch TV, that's 74-inch, no longer looks that much of a monstrosity. That's how that works. Love everyone. Totally embarrassed at Twitter. If everyone could do a bit of a Twitter dance, I'd be happy. But here is the key point to take away from it. Even with where Twitter is, we have 30 days from today. We're out of the money on the 40s by what? 12, 13%. And we still have money in the account that if we want to buy more, we still can. Again, there is ways to win. You could either win or lose. Fine. But there is a lot of gray area in between the magnitudes of wins and losses. Because anybody who went ahead and bought 100% position in Twitter in any duration less than a month now has an account of zero. Anyone that put 100% of Twitter at the 40s with a month out at one time now has an account of down 70%. Our account is down what? 25, 30%? Nothing to jump up and down about, right? But if I wanted to sell everything right now and I went ahead and purchased something different and made it up, could I be over 20,000 or 21,000 in a matter of days? Yes. I still love Twitter. And maybe I'm just psychotic, and I could be, right? Again, some of this is ego, and I know that. Some of this is just pride. I am going to stick with Twitter. Now, in a week from now, I then know that I have only 25 days left or 23 days left. I will make some decisions, but between now and then, I do not need to make a decision. Because if Twitter ends up positive 1 cent today, not only do I look like a complete genius, but my account is far higher than it was yesterday. So go Fed, right? So love everyone. Please be on at 12 o'clock. Oh, no, Alex, I get that. But I think I disagree. I think it's very clear that iPhone users spend more than Android users. That's not to say that there is not a segment of Android users that spends money. That's different. The mean and median are different numbers, right? I think the average Android user has less money than the average iPhone user. That's not to say that Android users do not have users that have a lot of money. I just think the average. And when you're doing anything, it's averages. Let's all say positive on Twitter. Yay! All right. I love you all. Have fun at 12 o'clock. I will be silently watching because I never jump in, but I will be taking notes. And I'm excited for a really, really great show. So love you, love you, love you. Go have fun. I know I'm leaving 17 minutes early, but it's purposely so because outside of losing money on Twitter, we need to make it up somewhere, right? So let's build a good company. I love you guys. I'll see you tomorrow. Bye. And 2 o'clock is volatility. If you have a position in the market that you're uncertain about, get out of it before 2, because 2 o'clock is either going to go really high or really low. So if you want to gamble, fine. But if not, 2 o'clock is your line. All right. Love you all. Bye.